Hello, my name is Jeff McTague, and welcome. This is the 5th installment of my series on the best mutual fund selection process available on the market. Of course, I'm a bit biased since it's my process. Today I take a look at trait number 3, manager tenure and its value in selecting mutual funds. I think most of us agree that manager tenure is very important to the fund selection process. But what do the facts say? Should you consider manager tenure when selecting funds? Reason might suggest the answer is always yes. Certainly a veteran should outperform a less experienced manager. I've researched this question for decades with the same shocking conclusion. It is of zero consequence. Zero consequence. The chart you are looking at now shows the performance of domestic equity funds for the last 3 years, 2014, 15, and 16. As an aside, as we go forward in webcast, I will be showing you lots of charts and graphs. You will notice I use a 4-color scheme to detail results because I break everything into quartiles. Green always indicates the best. Yellow signifies second quartile. Red is for third quartile, and the bottom quartile is represented in black. As you can see in this chart, longer tenure shows no noticeable benefit. And this chart looks like every other one I created over the years. That is, contrary to reason, there is no clear benefit to manager tenure. Yep, that's correct. Manager tenure exhibits no direct correlation to outstanding performance. However, the value of manager tenure in a bear market is quite another story. When the commercial flight on which I am a passenger is flying in clear skies, I seldom look into the cockpit. However, if we are about to take off in bad weather and likely to encounter difficulty, I want the most veteran pilot I can get at the controls. After all, my future may very well depend on it. For me, the same is true when my mutual fund encounters difficulty. After all, my financial future may very well depend on it. In an attempt to prove my point, I took a look at all equity funds by category for the very trying period of 2000 through 2002, and unfortunately I had to do it again in 2008. Did managers with tenure do a better job of flying safely through the storm? You bet they did. The chart now on the screen shows the average category return ranks during the bear market of 2000 to 2002 for funds whose managers had on-the-job experience ranging from 1 year to more than 10 years. The managers with the longest tenure consistently did the best job of minimizing the devastation of both those bear markets. Of course, the conclusion is always yours, but I feel that since we experience a bear market once every 5.5 years, it is wise to consider manager tenure as one of the 11 key traits of mutual fund selection. I thank you for watching today's webcast. I look forward to our next session when you will discover selection trait number 4, fund turnover. Until then, this is Jeff McTague reminding you, unless you can prove it, it's just your opinion.
Right here, right now, right here, right now.